Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. Let's get a check on Intel, Carol, because this is the stock to watch in the after hours right now. Shares just absolutely cratering.
Down
the company.
11%.
Wow, down 11%. A series of what we call red stickies here. This company suspending its dividend. The revenue outlook missed. It saw third quarter revenue come in. The outlook goes from to 12.5 billion to 13.5 billion. Estimates were for 14.38 billion. They're implementing a more than 15% headcount reduction. They've announced a $10 billion cost reduction plan, and they've suspended that dividend starting in the fourth quarter of 2024.
Looking at our Ian King, who follows the semiconductor space, out with his story on the Bloomberg about Intel. He talks us, it reminds us that CEO Pat Gelsinger, despite a massive spending plan to restore Intel to industry prominence, is struggling to improve the company's products and technology fast enough to retain customers. And so this is part of the problem, right? They've been trying to do this turnaround, and it's been imperative for Pat Gelsinger and the company to show that they are having some progress on this. This is not necessarily a quarter that shows any kind of progress. If anything, that shows that they've got to continue to kind of rein in costs and try and figure this out.
Okay, well, let's see what James Chalkmark has to say about this. He's a technology analyst over at Clockwise Capital. James, good to have you with us. We love talking to you around earnings. You guys have the ticker TIME is your ETF. I don't see Intel in there. Yep. This is a company, though, I know you have followed in the past. Tell us your reaction to this huge news out of Intel with this cost reduction plan, suspending the dividend in the fourth quarter of 2024, and then also these thousands of layoffs.
Yeah, I mean, they had to do something, right? They have to right the ship somehow because the growth is just anemic. And one way to do that is to find a way to grow again, or you can fix things on the expense side, and it looks like they're giving up on the former and going toward the latter. And we're turning slightly more cautious on semis more broadly. We've been cutting our exposure there across the board. We're basically just now left with NVIDIA, a little bit of SMCI on the data center side, and GEV on the utility side. So we're rotating the portfolio, and I think that this rotation out of tech is going to be more prolonged and not just kind of the last 2 weeks that we saw.
Why are you rotating out of stocks? We talked about this with our Gina Martin Adams, who follows the equity universe for us, our chief equity strategist here in the U.S. I mean, the SOX is up about 16% this year, but we've had two volatile days this week of a big sell-off and then a big rally and then a big sell-off, if you will. It's seen, though, as a leading indicator. You're saying that in terms of the semi-cycle that you're seeing retrenchment, that we're going to see a pullback?
Well, I'd say across large tech more broadly, we've been really borrowing from 2025 returns. Apple and Microsoft are probably the poster childs of pulling from 2025 forward. A lot of hype, obviously, around AI and chips and what that means for the industry. But a lot of that is increasingly priced in. So, and on the backdrop, you have a weakening economy. You have uncertainty as it relates to the presidential election. You have now a Fed swaps pricing in 3 rate cuts by the end of the year, which to us is somewhat absurd. So the probability of negative surprises outpace the ones of positive surprise. So I think you got to be more balanced, look more value names, small cap names. So we've been diversifying out of large cap tech and broadening out the portfolio to sectors, quite frankly, really aren't part of the innovation tilt that we have.
All right, you're always come on days where Snap reports earnings, and I know you don't own Snap. I know you covered Snap from the beginning. When it IPO'd, you and I spoke years ago, James. You changed your tune on this company. Shares are down 22% right now. The company forecast adjusted EBITDA for the third quarter. The guidance missed the average analyst estimate. What is going on with Snap?
I mean, I'll say the same thing I tell you every time. I mean, it's when I first started, they had Evan Spiegel laid out the vision. It was a sound one, but they had an identity crisis where they don't really know what they need to be. You can either be an ad platform that serves everybody and go large, or you can be super niche and drive engagement and monetization on a per user basis. They're doing neither of those, and I just think they're just kind of lost. We're and this market is one that's rewarding companies that have failed in recent quarters because they've been beaten down too much. Snap, definitely wouldn't put into that bucket.
Let's go to Amazon. Obviously, we've talked a lot about the companies that are reporting today, Amazon and Apple in particular, and how they can shape sentiment when it comes to the NASDAQ 100. Amazon's down more than 4% as we speak. A lot of it has to do with the outlook. Sees third quarter operating income of $11.5 to $15 billion. That is shy of the street estimate of $15.66 billion. So the outlook not very upbeat. Second quarter AWS net sales, always important in terms of profitability at this company, $26.28 billion. So that was actually better than the street estimate of $25.98 billion.
Yeah, I was just going to add in for James that it's the sixth biggest holding in your Clockwise Core Equity and Innovation ETF. So it does make up about 4% of your portfolio. What's your reaction to the numbers that we just got?
Yeah, it's 4% now. It was 6% a week ago. So, we cut exposure into the print, worried about really the softening consumer, the implications for retail revenue as we look forward into the second half of the year. Obviously, CapEx was a big question, but I think Microsoft kind of muted those fears. But a lot of the hype around the operating income leverage, there was a lot of hype around it, quite frankly, and it's happening, which is good. But they need the revenue to keep up with it. On a positive note, AWS is doing quite well. That was slightly better than expected. So. All in all, I'd say it's a pretty good quarter, but it's one that was certainly we'll see what they say on the call, but I think this falls into my comments earlier about big cap tech. Just can't be overweight these names to the same degree as you look into the second half as we were in the first half.
So James, the selling that we're seeing in the aftermarket, I mean, this is Amazon is up 21% so far here in 2024, and I know there's a lot of metrics in how we do it. I'm just going to go basic. Your forward PE of about 40. But is this just a case of the fundamental story at Amazon you still like, but maybe valuation-wise, maybe that is some of what we're seeing in terms of the selling?
I think so. I mean, they ultimately missed numbers, right? So
for the forecast,
the algos coming, and the algos coming in, exacerbating the pressure, but. They could walk it back on the call, provide more color commentary. I got to look to see exactly where the weaknesses were. But that being said, I think I think you got to take this into the context of what happens to big tech from here. A lot of these have had remarkable runs. Will they be able to outperform in the second half? So the same degree that they were in the first half? We just don't think so.
Okay, so what does happen to big tech here? I mean, NVIDIA is your top holding. It's 5% of your portfolio.
Yeah, well, it was 4 yesterday, and then then it went up. It was like 4.3, and then went up to 5 on yesterday's move. We got to evaluate NVIDIA, but that's the only one really that we have no problem kind of maintaining that more sizable weight. It's really the other companies within the semi space that we've shed from the portfolio, and really we're just limiting it to NVIDIA, SMCI, and GEV as we think about the data center.
All right. Well, there's a lot going on, and the earnings continue to cross the Bloomberg terminal. Looking at DraftKings down about 8%. It coming out with a little bit of a forecast. We'll break down some more of those numbers. James Chakmak, thank you so much. Busy earnings day, and you walked us through it. He's tech analyst over at Clockwise Capital.